YouTube, what's going on? It's your boy Drew Trades, back with another video. Updating you guys on the account, updating you guys on the trades that we got into this week. Our trades for the month, our account update for the month, things of that nature. So this week we had got into kind of like four setups. We had gotten to GBPCHF. That was the first trade of the week. I actually lost this at first. I cut out the picture a little bit, but we had lost that trade a little bit first. We got a GBPCHF on Tuesday. We traded the JPYs on Wednesday morning, and then we got into Euro AUD on Thursday morning. So we traded GBPCHF, EURJPY, CADJPY, and then Euro AUD. So roughly four trades for this week. Theoretically, we lost 1-1-1. It cut out the loss, or whatever. It wasn't really a loss, but that's the thing. So we're gonna go over that. I'm gonna show you, but we lost 1-1-1. So that's two, 1, 2, 3, 4, 5, 6. One. This is one trade. So we got into 1, 2, 3, 4, 5. We won one. We won. I'm getting mixed up. We got into one setup, two setup, three setup, four setups, and we won two of them. So we're 2 for 4. Whatever. 2 for 4, right? So we're 2 for 4 for the week. Obviously, we won half our trades. We profited over $2,000 for the week so far with our trades. Profit over $2,000 for the week. Right now for the account for our month. Profit for the month right now we've made about $4,500, almost $5,000 for the month. Kind of closing out on the same amount that we made last month. We made $6,000 of profit last month. We have about 3 more trading days left for the month, so hopefully we can get maybe 1 or 2 more wins and kind of profit the same exact thing. But like I said, right now we profit about over $4,000, $4,500 on this account. Um, so as you can see, we started our account at $10,000 in March. We got it up to $16,000 at the start of April. Right now for April, we profit over $4,000. 40. So I think we're actually at 4,200 because the 4,500 it doesn't include like the fees and stuff. So right now our account we're at over we've made over $4,000, about $4,200. So right now our account's sitting at over $20,000. We doubled the account already. We doubled our $10,000 account that we started in March. As you can see, these are all of our trades for the month. As you can see, GBPCHF, we had lost it first, then we had won it. And we got into EURJPY, CADJPY. We're gonna go over all this, and then obviously EURAUD. Last week we broke even. Last week we won our GBPCHF trade, and we lost the remaining days of that week. Obviously, profit the week prior to that, profit the week prior to that. As you can see right now with our account, we won 41% of our trades. Okay, so as you can see, we haven't even won 50% of our trades this month. Last month, we had won, about 60% of our trades. Okay. Still in profit over $4,000. We still, obviously have grown this account. We've already doubled this account. And like I said, we haven't won every single trade. As you can see, it's a lot of red, right? But there's also a lot of green as well, right? So we're going to break these trades down, show you exactly, what it was that I was looking at when we were going over this. Like I said, we only have about 3 more trading days left. Actually, no, about 2 more, yeah, 3 more trading days left until we hit May. Right now, like I said, my goal is really get this count to about $25,000. I may even stretch it a little bit longer to get it to about 30,000 before we start risking a little bit more. For me, I want to have a lot. I want to have a lot of cushion. I want to have a lot of breathing room for me to be able to manage potential losses that I can have. And when we're risking a little bit more money, obviously you want to have more capital to obviously sustain you in the act of if we do go on a losing streak, we do lose 2 3 trades in a row. We want to have enough money sitting in the account so we can withstand that the damage that could potentially be done. So get this count to about $25,000-$30,000 before we start risking a little bit more. So let's start out. So as you can see, EURAUD, we had traded that yesterday morning. We got into CADJPY. We had lost this. We got into EURJPY. This trade, so I'd sent it out, and within about 15 minutes, I told everyone to get out of it. We're gonna go over that. I'm gonna show you why that was the case. And then boom, this one, what is this? This was the GPCHF. So this is GPCHF. This was a trade for some reason, because so obviously I'm trading this account. This is the account that I'm kind of like growing and showing you guys, but I have another account that I'm trading off of. And with this account, with the account that I'm showing you guys, I hit the stop loss, but on my other account, the stop loss didn't get hit. And also some of my students too, their stop loss didn't get hit, but then some students, their stop loss got hit. So I guess depending on your broker, depending on who you're trading with, um, like when we go over it, you're gonna see the stop loss that we have in place didn't get hit. You know that we're gonna go over this. Like the stop loss did not get hit, but on some brokers, it actually did come all the way down and hit it. So, like I said, so in regards to this count, that's the reason why I had got in again, because it literally came all the way down and spiked all the way back up to where our entry was. So I was like, okay, still have this is still a valid entry, it's still a valid trade. So and then obviously end up hitting take profit. So we're gonna go over that. And yeah, those are the trades that we had got into for this week. So we're gonna start out with let's start out with that GPCHF. That was our first trade of the week. Let's go all the way to the top. All right, GPCHF. So we had bought this at 12:36 a.m. This is what the market was looking like. This is where market was at. We're obviously predicting that to go to the upside. So to go to that GPCHF and let's see what this was looking like during that time. All right. GBPCHF. Let's go here. Let's go to the time frame. All right, so this was Tuesday morning at 12:36 a.m. Let's rewind that. Tuesday morning. Oh, exactly at about. Hold on, I'm on the wrong date. 1 second. Tuesday. About right here. Give or take. Okay. So this is where market was currently at during that time, 12:36 a.m. Okay. So when we were looking at this, okay, when I had sent this out, right? When I opened this up, right now, obviously it's about 12:36 a.m. Okay, this is what the market was currently looking like. As you can see, we can see that we're on a potential upward trend. We can see that market's making its higher highs, okay, higher lows, higher highs, higher lows, higher highs, things of that nature, right? We see that obviously market took out that high. We see market retrace. We see that market's respecting this structure, and now we see the market is getting ready to make that next move. Okay. Now, with our understanding of how the market moves and flows, we understand that the market is going to be moving in a similar to equal swing. So we see that market had made this move, so we know that it could potentially make that exact same movement again, right? We're going to use this to map out, how we can get our chunk of the pie from this move, right? So obviously, like I said, this is the first thing that I noticed. I saw that we're on an upward trend, and I saw this as an opportunity for us to potentially trade. Okay, so obviously, like I say on every single call, what we're paying attention to is the structure, right? If we're seeing a clear high get taken out, and we see market retracing, and we see market getting ready to make that next move, this is our opportunity to trade. Same thing if market's on the down is on the downside. We see that market's on a downward trend. I want to see market respect that high, and I want to see market getting ready to make that next move. That is my indication that that's my opportunity for me to potentially get into a trade. Okay, because like I said, with our understanding of how the way the market moves and flows, the market's going to be moving in a similar to equal swing. So if I see that market is getting ready to make that next push up, we can theoretically map out exactly where that move is going to go to. And like I said, we can use that to our advantage to get what we need, what we want out of this market. Okay. Now, obviously, just like I say on every call, what we're doing on this time frame, because for me primarily, I'm trading off the 4 hour time frame, right? Now I'm not only going to the 4 hour time frame and just seeing, hey, we're on an upward trend, let me try and buy this. No, first of all, I'm getting that confirmation that this is even something that I can potentially trade, right? And then after that, I need to have a thorough understanding of what this actual market is telling us it wants to do, right? So what we need to do is we need to look at this all the way from the top. We need to go from the monthly, see what this look like from the monthly, see what this look like from the weekly, from the daily, right? And if everything is aligned and going together, then when we go to our time frame that we trade off of, we're going to know exactly what it is that we're looking for. Okay, because remember, within every single trend, there is a trend. We don't know if this upward trend that we're seeing is market just retracing from a higher perspective and is actually getting ready to start coming to the downside and going on a downward trend like this. Okay, so we need to have an understanding. We need to make sure that this is actually wanting to keep going up to the upside. Okay, so we go to the monthly time frame. Right? We go to the monthly time frame. We can see that overall we're on a downward trend, right? We can see market made its lower low, made its lower high, made its lower low, made its lower high. Okay. Now we see that market's getting ready to make that next push to the downside. Okay. Remember, train your mind to just look at this market as a series of zigzags, like a series of like a series of zigzags, like focusing on the structure, not paying attention to every small itty bitty move, right? Understanding how the way the market moves and flows. This is how the market is moving and flowing. So when you train your mind to look at the market just like this, it's going to be a lot easier to trade. You're going to know exactly what it is that you're looking for. You're going to know exactly is what market's doing. We understand that the market can't only go one of two ways. It can either go up or it can either go down. But we have an understanding that if market wants to come down, it's going to trend down. If market wants to go up, it's going to trend up. So understanding how the market trends, being able to identify that trend, we're going to know exactly what it is that we're looking for, right? So, and then also too, having an understanding of how the market moves and flows when it does want to trend. We know that the market is going to be moving in similar to equal swings or greater swings, right? But all we have to know is we know that if market made this move, we know the market's going to make something similar to it, and we can map that out. And like I said, use that to our advantage to get what we want. So now, me seeing that market had made this push to the downside and it started to retrace, I know that if this move does want to keep coming to the downside, market's going to make something similar to this, so we can use that to our advantage. And remember, everything that we're seeing on this high perspective, the small time frames are going to tell us. Because like I said, within every trend, there is a trend. In order for this move to be made, that trend on the weekly needs to be made. Okay. In order for this move to go to the upside, that trend from the weekly perspective needs to go to the upside. So, let's say like market wanted to stop on a dime right here and wanted to start going to the upside, the small timers are going to tell us, the weekly timers are going to tell us, okay? Because obviously if market was on a downward trend and it wanted to start going to the upside, we're going to see a break of structure, we're going to see market fail to make a new low, and we're going to see that next trend, okay? So when we go to the weekly time frame from this, right, we're identifying the trend. If you can't see the trend that's going on here, go in the past. This move was already made. This move is already made. So identify this structure, right? Identify this structure within the moves that have already been made and follow it with the move, with the current structure, where the current market is at right now, so we know exactly what it is that we're looking for. Okay. So, and this is what I mean by stop trying to pay attention to every small itty bitty move. Pay attention to this. Okay. So like look here, right? So this move is already made. So we understand that in order for this move to be made, this structure has to be made. Okay, so identify it. So we can see right here, market made its high, market made its low, market made its high, market made its low, market made its high, market made its low, market made its high, market made its low. Boom, boom, boom. Okay, the market came all the way down. Okay, so now look right here. We know that market retraced up from this perspective. So now we need to identify, right? we need to identify this movement within this, right? So, and this is what I mean by we're not paying attention to all these small itty bitty moves. We're figuring out this structure within this. So when we do that, we can see that market made its push to the upside. We see market retrace. Okay, we see that from this point to this point. This is the lowest point market I got to before this high got taken out again. So now that this high got taken out, okay, we can see that market is now getting ready to come to the downside. So now we need to identify this structure within this move that is already getting made. So now we can see market made its low, market made its high, market made its low, market made its high. We see market take out its low, and now we're seeing market starting to retrace. So let's draw this out so that way we can see everything visually. Draw this out. Draw this out so you can see visually. Right? All right. Trace from that monthly. Now market's getting ready to come back to the downside from that monthly. I remember, like I said, okay, everything that we were seeing, right? Because when we went to the monthly time frame, we were like, hey, we're on a downward trend. This looks like this wants to keep coming down. Remember, like I said, the smaller time frames are going to confirm and tell you everything, right? Because if this move does want to keep coming down, we're going to continuously see this structure get respected, right? So now where we're currently at with this market right now. So remember, like I said, the market is going to be moving in a similar to equal swing. So what do I mean by that? Okay. What I mean by that is if market, so we see that market's on a downward trend right now, right? You see how when market's on this trend, you see how when market made this move and it retraced and kept going to the downside, you see how market at least made that move that it did before this, right? Market made that movement and made an even greater movement. Okay. So now we know that when moves want to continuously be made, continuously keep going to a certain direction, we know that market is going to at least make something similar to what it did before, right? So you see how right here, right? So obviously market made a greater move and it started to retrace, right? Once market started to retrace, we see that market continue to make that push to the downside. So now we see when market made this move, see how market made that exact same movement again. Okay, made that exact same movement again. Now, once market makes a similar to equal swing, we're not expecting this to continue going to the downside, right? Because we don't know how much lower it's going to go to, right? That's the cool thing about understanding how the way the market moves and flows. When we have when we understand that okay, market's going to at least make a similar move, we can use that move to map out exactly the direction of where market wants to go to. Once a market makes that movement, it can do one or two things. It can start retracing because remember, this move is not going to keep coming down forever. It's going to continuously trend. So once market makes that move, it can either start retracing or it can make an even greater move to the downside. But the only thing about it making a greater move to the downside is we don't know how much lower it's going to go to. It can make a smaller movement just like this and then shoot it all the way up. It can, make this exact same movement, shoot all the way up, or it can go all the way to hell down and shoot all the way up. We don't know. The only thing we know is, like, let's say markers right here. The only thing we know is that market is going to at least make this movement. Okay. So once market makes that movement, we are now expecting this to start to retrace. Okay. Now, in order for this to retrace, that is going to be a trend within the small perspective. It's going to be a trend within the daily time frame. And that's what I mean by the small time frame is going to tell you everything. Because once market makes this move, I'm not even trying to sell this anymore. The only thing I'm trying to look for is a buy because we know that market needs to trend. Market needs to retrace from that weekly perspective, which is going to be an upward trend within the daily, upward trend within the 4 hour, things of that nature. That's what I mean by we need to have an understanding of where we're at within the market so we know exactly what it is that we're looking for on the time frame that we're trading off of, the 4 hour time frame, right? So now me looking at this, I'm seeing this as okay, market has made a similar swing, and we can clearly see market is obviously retracing right now from that weekly perspective. Okay. Now, we know that we know that when market retraces, we know market likes to play off of the EMA. So honestly, where market was at during this week, because this candlestick is showing us what the entire market has done for the week. But when we were looking at this on Tuesday, I think market was like all the way down here, or all the way down here or something. So we know that market is going to at least retrace and at least come to our EMAs. Okay, remember, our EMAs are treated like a support and resistance. So we know that market is going to at least come all the way up and hit our EMA in here. So now me looking at this, I'm like, okay, hey, I'm looking for I'm deliberately looking for buys this week for GBPCHF. Okay. So now we understand that for this to happen, there's going to be a trend within the daily. Let's go to that daily time frame. Okay. Now we can see that trend within. So you see how that weekly candlestick, it plays the entire thing out. But when you keep zooming in, because obviously we rewinded it to Tuesday. This is where market was at on Tuesday. Even this move wasn't made yet. Market was like down here. So we knew that we had all this room to play with potentially, right? So now, okay, same thing, the same concept. Identify the trend. If we can't see the trend here, go in the past. Figure out why this move was made and follow it. We can start right here. Okay, we can start right here, right? We see the market made that push to the upside. We see market start to retrace. We see market made that next push up. We see market start to retrace. We see market take that high out. We see market start to retrace. Market came up, came down. Market came up, completely took out its low. We see market retrace up. We see market came down. Okay. Now remember, like I said, right? Understand where we're at with the market. Once market makes a similar to equal swing, we are not expecting this downward trend to keep coming to downside. We're expecting this to start retracing. Look where market is. What I mean by this smaller time frames will tell you everything. If this move wants to keep coming down, small time frames will tell us. Okay, so we see right here, we see that market made that push to the upside, right? We see market retrace, and now we see market completely take out that high right here. Let me zoom in. And okay, see market came all the way down, boom, took out the structure. Now we see market came up, took out that last high, right? We see market retrace, and now we see market getting ready to make that push to the upside. So now we're seeing that upward trend. We're seeing that our highs getting taken out, our lows now being respected. Now we know, like I said, the markets like to move flow with the EMA, so we know that market's going to at least come inside this area to, obviously retrace. So we have all this room to play with, and like I said, we understand that this daily trend, right, is going to keep going to the upside. And like I said, this move didn't happen yet, right? This is what we caught. Okay, so during this time, market was like down here. We understand that this daily move up is a trend that's going on within the 4-hour time frame. Okay, it's here. Okay, so let's zigzag this up so we can see exactly what it is. Mm-hmm. One mark came up, down, up. Mark came down, mark up. Right, market need to make the market continue to make that push to the downside. Right, because obviously during this time we're on a downward trend. Right, market's making its lows. Okay, market came up, failed to make a new high. Obviously, you know, giving us an indication that I want to keep coming to downside. So now that market failed to make a new low and took out our last daily high. Okay, so this isn't even. We don't need this. Okay, market came down. We see that market took out that our daily low. Now we know that market's getting ready to make that next push to the upside. And so now that market took out this high, we know the market is going to at least make this similar movement to the upside. Okay. Obviously, in order for that to happen, It's going to be a trend within the 4 hour. Okay, so now let's identify the 4 hour trend. Okay, because obviously these daily movements are trends within the 4 hour. Let's start right here. Let's start down here. Okay, because obviously we're on a downward trend within the 4 hour. Right, market came up, market came down. We see market made that next push up. We see market came down. We see market made that next push up. We see market break this structure. We see market make that next push up, check out that high. We see market start to retrace. We see market come up. We see market start to retrace. We see market come up. We see market start to make that push down. We see market take out that 4 hour high. We see market retracing. And now we see market getting ready to make that next push to the upside. Okay. So this is the trade that I sent. uh, down, came back up, down, came back up, down, up, came down. Okay. Boom, same concept. We know that market is going to at least make that next 4 hour swing to the upside. Okay. But remember, we're not even necessarily trying to catch this whole move, right? I'm not trying to catch this whole 4 hour move. All I'm trying to do is I'm just trying to get my chunk of the pot. Okay. As you guys know, in every single trade that we're getting into, all we're looking for is a 1-to-2 ratio. Okay. All we're looking for is a 1-to-2 ratio out of every single trade that we're getting into. So even if we're trading this and this gives us a 1 to 5, 6, 7 ratio, all we need is 1 to 2 because that's how we stay consistent. That's how we continuously grow our account because we understand the market can do whatever it wants at any time, right? Just because we have our knowledge and we know what this market can and may want to do, we're never going to be greedy. We're never going to try and get more than what we need out of the market. Like I said, you're going to find your best results. You're going to see yourself be a lot more consistent and profitable when we're just going for low hanging fruits, right? Let me just get that 1 to 2. What you really want to focus on is growing your account, right? Getting your account to a point where, okay, I can risk $1,000 to make $2,000. Like I can risk $5,000 to make $10,000, right? You know, because when you do that, this is the safest way to trade. This is the safest way to grow your account and guarantee that you will grow your account. Because, like I said, when we have an understanding of how the way the market's moving and flowing every single day, right? You know, trading like this, one, we don't need to win every single trade, right? And the cool thing is, we don't have to win every single trade, right? Right now, we've only profited 40% of our trades this week or this month. Last month, we got 60%. This month, we're only at 40%. We're still in, great profit, right? Still in great profit. We doubled our account and things of that nature. But, like I said, when we're trading, we're not necessarily trying to trade this entire thing. We're just trying to find our low hanging or trying to get our piece of the pot, right? So when we're looking at this, okay, what is the main thing that we're looking for when we're trading, right? We need to see a break of structure within that 4 hour time frame. So let's go to our actual picture, show you exactly what it was looking like. As you can see, this is our exact picture that I sent out. All right, so during this time, market was sitting at 1.08478. This is at 12:36 a.m. Go to the 1 hour, just go to that exact price. I already forgot the number. It was 1.08 1.08478. That was where market was at during that time. 1.08. All right. Okay. So this is where we entered at. All right. That was my exact entry. Now, how do we base our stop loss? How do we base our take profit? Okay. So remember, we're basing every single one of our trades based off of the 4 hour candlestick. Okay. So given the fact that market just took out this candlestick, we are paying attention to that last candlestick low that it made. We're basing our trade based off this. Okay. So our stop loss was at, we go to the exact stop loss because um, you're gonna see that market, our stop loss is at 1.08217. at 1.0821217. Okay. Okay. 217. Literally right below the low, right? Right below that 4 hour candlestick. Remember, like I said, that's how we're trading every single time. Okay. So right below that 4 hour candlestick, obviously we have all this room to play with. We get our 1 to 2 ratio out of that. Get our 1 to 2 ratio out of that. Okay. So all we need is for market to just come. All we need is for market to just come up into here, right? Right. We don't need the entire move. Hey, just come under here, give me my piece of the pie, and I'm out of here. Right. So that's at 1.09060. So I think it's probably the same thing. Take profit 1.09014. So roughly the exact same price. Right. So that's our 1 to 2 ratio. Now when we play this out, as you're gonna see, um, yeah, you're gonna see because obviously I wasn't looking at this real time because once I got in this trade, I'd fallen asleep, and when I woke back up, market was back right at our entry price, but I saw that I was out of the trade on this account. So I was looking, and we played out. The market come all the way down. Look how close. I will say, like some of my students, it didn't take them out the trade, and even on my other trading account, I was still in the trade, but on this account, it got out. So I don't know if it depends on the broker or like just the account, but like our stop loss didn't get hit. Market came all the way down. They stopped right on the dime right before that 4 hour candlestick came all the way up, and then like I said, when I was looking at this real time, this is where market was at. We were back at our entry. So when we go, like I'll show you. I have so this is for the month. So as you can see, this was on Tuesday morning. So we had got in and it hit my stop loss. So I lost my $1,000. It literally came right back to where our entry was. As you can see, this is where market was at. Market came all the way back up, and I saw that on my other account. I was still in the account. Some of my students saying, "Yeah, we're still in the trade." So I was like, okay, this trade is still very, very valid. This is definitely going to the upside. So we had got back into it. As you can see, we're able to profit off it. When we play it out, right? When we play it out, market gave us a smooth sale, to the upside and smashed our take profit. So yeah, so this is that GBPCHF, and then obviously, like I said, we lost it originally, then we won it, so we, essentially profited $1,000 for that for Tuesday. Um, But yeah, it's funny. Yeah, I don't know why because I had the same stop loss, I had the same entry in my other account, and as far as the account that I'm previewing and showing to you guys. Um, I don't know why. I don't know why the stop loss got here because obviously this was great, but very very clean, very very clean, very very good setup. Like I said, we have profited on that, so that was our first dub for the week. So after GPCHF, I had sent JPYs on Wednesday morning. So JPYs, we had lost this. Close. Um, let's go over the JPYs. I will. I'm gonna mark up CADJPY. But with EURJPY, I'd sent this out. Um, I'd sent this out right before. I'll go to it just a little. I'm not gonna mark the entire thing about it. I kind of just want to show you what I was looking at and like why we got out of it early. Um, brief. Because we got out of it early, but then I started getting like more confirmation that the JPYs did want to drop. So then I felt a lot more confident in getting the CAD JPY. But let me show you what I was looking at. This was Wednesday. What time was that? 1:48 a.m. 4:23. 23. Roughly right. Our okay, so when we were looking at this, let me erase this. As you can see, I still have the markup up and whatnot. Um, but when we were looking at this, Kay, I was seeing this, coming to the downside. Um, I was seeing this coming to the downside. Now, okay, understanding how the way the 4 hour candlesticks move. Obviously, the candlesticks are formed every 4 hours, right? So right now, I live in Arizona. So what are we in? Mountain? Be forgetting. Pacific Standard, Mountain Standard, whatever the case may be. The 4 hour candlesticks move from 2 a.m. to 6 a.m. to 10 a.m. to 2 p.m. 6 p.m. to 10 p.m. and so on. Okay. So when we were looking at this, obviously this candlestick is from that 10 p.m. to 2 a.m. candlestick. So when we had entered this trade, I sent this out at 1:48. So as you can see, in the next 12 minutes, that next candlestick is going to be formed. Okay. So when I entered this, okay, remember we're basing all of our trades based off the 4 hour candlestick. So when I entered this, I think market was where were we at? Entry area 1.161.758. Okay. So as you can see, market made a big push down. And when we were looking at this, we were seeing that market had made this push up. So this was, a great opportunity to potentially trade. Once I start talking, 161, 161.758. So about right here, right? So literally we entered this right before that next candlestick was formed. So obviously we're basing our trade off that last candlestick. So I really was paying attention and it moved so fast. That's why I was kind of mad that I like lost the amount of money that I did. Because the candlestick opened up so fast. Where I literally, so as you're probably gauging what I'm looking at. So that next 4 hour candlestick that opened, if this candlestick had got taken out, I was gonna get, or no, I got out of the trade. But like I said, as soon as it opened, it spiked all the way up, and I was like, oh yeah, yeah, like get out the trade. So I was really paying attention to that last candlestick because, like I said, we understand that if this move wants to keep coming to the downside, and it's why we're paying attention to these 4 hour candlesticks. The candlesticks are going to be moving in kind of like in a symmetrical order, right? Until it makes that movement. So if we start seeing like a break of structure, and don't take that too literally, that like I said, that's just how I'm looking at the market. Like obviously, there's gonna be some times where market will go past just a little bit and then keep coming downside stuff. But for the most part, if we start seeing like market breaking the 4 hour candlesticks, it's usually an indication that it's getting ready to go the other direction. So like I said, when I entered this, it was right before that 2 a.m. candlestick. Um, so as you can see, when we play it out, market opened literally market opened and immediately took out the candlestick. So once that happened, I went in the chat. I was like, hey, get out the trade. As you can see, it's at 2:03 a.m. Literally, as soon as the candlestick opened, it went past it. Say, I get out the trade and all that setup. But like I said, during that time, market had already made a big spike up. As you can see, I said minor loss. When we go to our profit and loss section, we can see for the week. That's why I have a small loss on EURJPY. So we had lost half of our risk. So I was risking $1,000. We lost half of it. Really only should have lost like $100, $200. Like I said, it spiked up so quick. I didn't catch in time, but minor loss. So obviously during that time, I kind of was done, but then I started looking at CADJPY and I was seeing that, hey, this is, I don't know if this was just like a fake out or something. Like maybe this is actually because my analysis on JPY is I still have this coming to the downside. Like, when we mark this up all the way from the top, like this is giving us kind of like, a nice selling structure. So I didn't know if that was just a fake out. So we've gone to CADJPY. I'll mark this up and show you what I'm looking at. Um, It's a similar structure. Um, let me erase it. So this is what I was. You can kind of see like this was the trade. I was expecting this to keep going to the downside. Let's mark this up. Let's actually figure out why, because I haven't looked at this at all other than from when we were trading it. Let's actually figure out why this went bad. So obviously, when I'm looking at this, the main thing that I was paying attention to is I see. Well, first and foremost, the main reason why I was looking at this way is because, like I said, I had EURJPY coming to the downside. So when I saw this structure, market coming down, market taking out the high, and seeing that this got broken again, I was seeing this as this is getting ready to make this move potentially. Right, I was seeing that this is getting ready to make this same movement potentially. Right, I didn't know if EURJPY maybe had a lose event or whatever the case may be, but like I said, like I still had JPYs as a selling structure. So when we mark this up from the top, right, I'm gonna do this fairly quickly just for the sake of time. When we look at this from a higher perspective, we can see that obviously market is on a downward trend. We see market made its lower low, lower high. We see market took out that structure. So now we know that if this wants to keep coming to the downside, the market's going to be moving in a similar to equal swing. Cool, market made that move. We see market start to retrace. Okay. Market makes this push to the downside. Okay. We understand if that's going to happen, that's going to be a trend within the weekly. We can see that weekly trend right here. We see market made its lower low, lower high, lower low, lower high, lower low, lower high. Okay. So, like I said, this is giving me all the signs and indications that this wants to keep dropping, right? Market made that retrace up. We know that the market's going to move in a similar to equal swing. Did that. We're using this as a map to figure out where the next move is going to be. Okay. All this room to play with respectfully. So, this is a very clean setup to potentially keep coming to the downside, right? Obviously, if that move is going to happen, that's going to be a downward trend within the daily. We see market made its lower low, high, lower low, lower high. Market took out its low, and this is probably where we got messed up. Because remember, like I said, once market makes a similar to equal swing, we don't know how much lower this is going to go to. Okay, we don't, and I think I was trying to continue selling because of what EURJPY looked like. I think EURJPY had like more room to keep coming down, whereas on CADJPY, right, we can see that market literally made that exact swing, right? Made that exact swing. And obviously, once market makes that similar swing, we're expecting this to start retracing. So I think that's why this move ended up going to the upside. We go to that 4-hour time frame. As you can see, that was exactly what market was telling us. We can see, obviously, during this time, market was on his downward trend. All right, market was on his downward trend. Market came down, came back up. Right, so we can clearly see, this is getting ready to start retracing. So we can see market make that push down. And like I said, I was kind of seeing this as this wanted to keep coming to the downside. But as you can see, this is what market ended up doing. We knew that this needed to start retracing at some point, even though the overall move is coming to the downside. We know that this needs to start retracing at some point, and that's exactly what it ended up wanting to do. Right? Let's draw this out. So, you know, um, just lose it in. Honestly, you guys got to understand, like you're gonna lose trades. You're never gonna go a month where you just win every single trade. That's not how trading works. It's not a profitable, realistic strategy, right? Our goal is to win half of the trades that we get into, right? So if I'm finding setups that's checking off every single thing that usually gives me a win, I'm gonna take it every single time, right? And let the probabilities play in my favor. Because like I said, even though I'm trying to win 50% of my trades, I don't even need 50% of my trades to be profitable. I don't even need to win 40% of my trades to be profitable, right? We're at 41%, and I profited and profit nearly $5,000. Okay, risking 1,000 to make 2,000 on every single trade. Okay, we've traded about 10 times this month. Right, we won 40% of it. Even if I won 30%, I'm still in profit. Okay, so with trades like this, you guys gotta understand, like, losing doesn't mean anything. It's just rinsing and repeating. Do the same thing every single time. Let the probabilities play out. Even if you lose, oh well. Like, I lost this trade, didn't care. Went to the trade the next day, did the exact same thing, got our money back, and made more. Made significant more. And we're gonna go over that as well. But obviously we played out. Like I said, had this selling, and this ended up going to the upside, obviously, because this is still retracing or whatever from that daily perspective or whatever. Um, but yeah, so this is where market's currently at right now. Market took out its high. We see it's still retracing, so all good. And that's probably why EURJPY looked the way that it did. That's probably why it started going up as well. But we can see that this is still retracing from that daily. So all good. Minor loss. Actually, this is kind of like a major loss because we lost half of our investment and then we lost a full investment. So I lost more in a day than I usually go for. Because like I said, I thought this was like a clear cut sell, but as you can see, traded twice for the day. We traded twice for the day. Both these days, these are kind of like we. One thing about me, I don't get into multiple trades for a day, unless there's like a clear cut reason. Like for this one, for example, like our setup was still intact. With like everything was still perfect. Like it was still a good trade. I don't know why our stop loss like got hit on my broker, but on the actual market, it's still valid. So we got in the same trade, but like stuff like this, like we don't usually get into two trades for the day. So we lost more. We lost more than what we try to aim for the week. Um, we lost more than we try to aim for in a day. So it was whatever. You live and you learn from that. But boom, we get into year AD. So we got our money back from the model loss, and then we got our actual trade. So I'm going to show you exactly how that came about, because it's not like I intentionally was like, oh, I need to get my money back. No, this was actually like a very, very valid setup, and it was kind of similar. Actually, not kind of. It was similar to what I was looking at. Hold on. It was similar to what I was looking at on um, Wednesday morning when we were looking at EURJPY, and I was waiting for that 4-hour candlestick. It was the same exact scenario. All right, so we're gonna go over that. I think we had entered this trade right before like the 6 a.m. candlestick. Um, Yeah, so we had entered this at 5:20 a.m. So remember that next candlestick is going to open at 6. So we were trading this, and then that next candlestick gave us the opportunity to obviously adjust our trade. Instead of having our stop loss at that previous 4-hour candlestick, we now have it at the next, which gives us an opportunity to make more money because our take profit is still essentially the same thing. We're still risking this 1 to 2, but now, like I said, we can make more money. So let's go over that. This is the last trade of this week, and this is one of the longer videos. We haven't traded this much in a week. I think prior we've only gotten to like 2 setups, 3 setups. Um, let's rewind this. We traded this at 5:20 a.m. So 5:20, right before the 6-hour, right here. Boom. Okay. So this is where market was currently at, right? Let's erase all this. Where market was currently at, okay? Clearly see market taking out that 4-hour candlestick is a nice opportunity to trade. So when I originally had sent this, okay, market was currently here. Why were we even looking this up? Okay, go back to our previous trades, my previous explanations. We can see we're on a downward trend. We see that market, this is the first thing that I noticed. I see that market um, made a lower low, lower high. We see market made its lower low. We see market retracing. We see the market's breaking the structures, but so this could potentially be getting ready to make this move. That's how I'm looking at it, right? We go to that 1 hour. Remember, like I said, where we had entered this originally, Entry error 1.78085. 1.78085. Okay, this is where market was at during that time. So when I was trading this, okay, what are we doing? We're paying attention to that last 4-hour candlestick. Okay, this was that last 4-hour candlestick during this time, right? So this is at 5:20 a.m. Okay, so when the next candlestick opened, I'm now not looking at that last high. I'm now looking at. Let me just leave it. I'm now looking at this last candlestick high, because if I see this get broken, then I know that this wants to keep going to the. I know that this wants to start going to the upside. So now, instead of me risking $1,000 here, okay, I have an opportunity to, make the money back that I lost yesterday on that first initial trade by just risking the exact same thing here, okay? Because even if I lose this trade, I'm still only risking my, daily loss limit. I'm still only risking $1,000. But I originally entered with a lot size that was equivalent to this. So now I can enter with more money equivalent to this, but still keep that 1-to-2 ratio, because this is still the trade that we're risking. Okay, so we're gonna go over that. I'm gonna mark all this up just so you guys can see. But that was why we made a lot more money today than we usually do. Like I said, I'm usually going the 1-to-2 ratio, risking $1,000 to make $2,000. But this trade I made $22,700. Okay, so I'm gonna break that down and show you why. But as you can see, from a monthly perspective, we are on a upward trend. We can see, boom, market made its push to the upside. Let's get the exact thing. Market made its push up, down. Market came up, came down. So as you can see, market's completely overbought, right? Completely overbought. What I mean by overbought, we see that market made that exact same swing. We see that it's made an even greater swing. Even though this move wants to go up, this needs to start retracing at some point. Okay, so we are going to see market make a push down like this. Okay, so when we go to our weekly, all right, we're going to be able to see that trend. You can see the weekly trend right here. Boom, boom, boom. Market came up, market came down, market made that push up. Okay, even same scenario here, right? We see that market made that exact same swing, made an even greater swing. This needs to retrace at some point, and it's doing that right now. Now, what else do we know? The markets are always going to move and flow with our EMAs. So now that we clearly see market retracing from the weekly, we know that market is going to at least come all the way down to where our EMAs are at. Okay, so we already know clear cut 1,000 million gazillion percent Euro AUD is coming to the downside. We know that Euro AUD is going to at least come touch our EMAs, and then after that, it can do whatever it wants. It can keep coming down. It can start, moving back up and start getting ready to make its retracement. But we know that right now, today, this week, Euro AUD is going to keep coming down. No ifs, ands, or buts. Okay, it doesn't matter. We're finding our opportunity to get in with it, right? So as you can see, we know markets can come all the way to the downside just like this. Identify the trend. We can see market made its push up, came down. Next push up, came down, came back up. Okay. So now we see market finally took out this structure. So now we understand market made this. We know market's going to at least make something similar. Not even that. We know the market is just going to at least come down into here. So like I said, we already know this coming to the downside. We're just finding our opportunity to come down with this sucker. So boom. Obviously, let's draw this out more. Now we obviously understand, in order for that daily move to come to the downside, that 4-hour trend is obviously going to keep being respected. So identify the 4-hour trend, right? Can't see what's going on here, go in the past, right? This move is already made, so just figure out that trend. It was a very book-like setup. Quick and easy to saw this very, very quickly. As you can see, it's the first on my thing. So as soon as I opened up, I saw this. Yeah, this is money. So boom, market came So like I said, if you can't see what's going on here, just go in the past, figure out why all these moves were made. We saw right here, market came all the way down. We see market made that push up. We see market came down. We see market made that next up. We see market came down. This. Okay. See that from this point to this point, or even this, we can even mark this up too, because market came down. We see market came up. We see market came down from this point to this point. This is the highest point market I got to. Okay. Or market wanted to take out this low again. So we see market take out this low. The market retrace, hitting around our EMAs. What confirmation did we get that this wants to come to the downside? We're seeing that break of structure within the 4-hour candlesticks. We're seeing our candlesticks get broken, giving us that indication that this is the highest point that market wanted to retrace from that 4-hour. So let's draw this out. Down. Okay. We see market retrace. Boom, hit on our EMAs. For our candlestick got broken, give us that confirmation. Now we know the market is going to make something similar to this. All right. Oh, this is what we're trading, right? You know the market's going to make something similar to that. We get our chunk of the pie. Okay. And then, so remember when I sent this out, this is where market was at. This is what it looked like. Okay. Erase that. Boom, erase that. Okay. So when we're looking at this, okay, obviously we understand the market is getting ready to make this push to the downside right here. So when I sent this out, this is where market's at. This is what it looked like. Market was sitting at 1.78085. Okay, our stop loss 1.78720, right above that 4-hour candlestick. Okay, so this is where we originally had entered 1.78085. 78085. All right there. Okay. Stop loss right above that 4-hour candlestick. Okay. Right above that 4-hour candlestick. So that's at 1.78693. Probably the same. 1.78720, same thing. Okay. Boom. So we got our stop loss right there. Okay. So now pay attention here. So when we're looking at this, what are we doing? We're getting our 1-to-2 ratio out of this trade. Okay, we understand market's going to get ready to make that same push, right? We just need to get our chunk of the pie. All right, where's our 1 and 2 at? When we come down, sitting at about right here. Okay, all right here. This is all we need market to come down to. Okay, so obviously I set that out. Take profit 1.76888. 1.76888. So about right here. There. So our take profit is this gives us that 1-to-2 ratio. Right? Gives us that 1-to-2 ratio. Okay. So now let's look at this. Okay. So as soon as this next candlestick opened, okay, as soon as this next candlestick opened, now, like I said, I'm not even paying attention to this candlestick anymore. Now I'm paying attention to this candlestick. So I still have my one entry in, but now when I risk it from here to here, I'm not risking $1,000. Now I'm only risking about $600. So I could potentially, and I didn't necessarily send this out, as you can see. I didn't send out, hey, enter again, move your stop loss. Because like I said, for me personally, I wouldn't usually like try and get into this again. The only reason why I got into this again and gave myself this opportunity was because of our trade yesterday, where I had lost more than I expected. Okay, I lost $1,500 for the day, where I was only trying to risk 1,000. So this gives me that opportunity to get my money back while still getting the profit that I need to get for the day. So this entry right here, our first original entry, is going to give me the profit that I need for the day, $2,000. This second entry, okay, this second entry, since it was at respectively the same spot, hold on, just make it like, let's make it, okay. My second entry, this is going to clean up. This is going to clean up. This is going to clean up that trade the way I got into that previous day. Okay. So while still only risking $1,000 for the day. Okay. So as you can see, we see Mark came down, completely obliterated that last candlestick. So now we're just letting this ride out. Let's go to the 1 hour so we can see it clearly. Right. Now we're just letting this trade. We're just letting this trade ride out. Right. Let it go all the way to the downside. We know this has absolutely nowhere else to go but down. You know, this trade was kind of like too perfect. Right, boom, completely took out our stop loss or completely took out our take profit. So we profited on our first entry, right? That was me getting my actual $2,000. Then we got all our money back. So as you can see, all right, as you can see, Mark came down. I think so. I think I was supposed to get. I think I was supposed to get $2,000, but I think I was really paying attention. I think the lot size that I used was a little bit more than I needed. Um, so as soon as Mark came all the way down, I got all the money that I needed plus the $2,000. So once I was up, like I honestly could have gotten out earlier, but I kind of I wanted to stick with the take profit that I had sent out to all my students. So I kind of just held it till that. But as you can see, once it hit our take profit, it gave me all the money I needed. So essentially, I needed $2,500 for the day. So once I was up 2,700, obviously this was, I could have should have held this until I got 2,000, but there was no need because I was in these two trades. But um, yeah, those are the four trades that we got into. So we got into GBPCHF. Like I said, we lost it the first time. Explained that. I don't know why the broker, some brokers, some accounts got hit, some didn't. So we had entered it again. So we lost it. We won it. Profited 1,000 for the day. The JPYs, they were still retracing. We thought it was going to start coming down to sell. They're just telling us they want to keep retracing. Lost 1,500 for the day. Then we got all of our money back. And obviously, we got our money back, and then we made money for our actual trade for this. So for the week, profited roughly over $2,000, as you can see. For the month, we're still up $4,500 on this account, $4,500. We've doubled our account. Account's now sitting at $20,000, and now we are just continuously, growing. Like I said, we're gonna get this account to about 25, 30,000 before we start risking a little bit more because point perspective. And this is what I mean by, don't when you're going on this market, like don't try and focus on winning every trade, getting 80% win ratio, 100% win ratio, getting a 1 to 5, getting a 1 to 5, 1 to 10 trade. None of that honestly matters. What you really truly want to focus on is getting more capital, right? Because with more capital, think about it like this. All I have to do is do this exact same thing, but with more money. Because from perspective, all I was doing was risking $1,000 to make $2,000 on every trade. Okay, if I had more money, I would just do the exact same thing with this account, and I'll risk 2,000 to make 4,000. Now, with me doing the same exact thing, instead of me being up $4,500 for the month, I'm up $9,000 for the month. I'm up $9,000 for the month. Okay, let's say we just keep rinsing and repeating. Let's say I'm playing with a bigger capital. I'm playing with a $5,000 or $50,000 account. Probably going to risk $5,000 out of that $50,000 and do the exact same thing. Okay. Now, instead of me profiting 4,500, what would that be? I'd be in profit over $20,000 for the month just by doing the same thing. So, I really encourage people, and this is what I mean by it's like, but like make sure you have like multiple ways of making money, getting money and stuff. Like grow your account, right? have different avenues to like get more money. Because obviously for us, what I'm gonna grow this account. My goal is to get this to like over six figures by the end of the year, just this account alone, right? Trying to show you guys what it looks like, you know, trading the right way, growing your account the right way accurately, and still, making a substantial amount of money while not even being 100% perfect in getting every single trade right, right? We're going to win about 40-50% of the trades for this year, and you're going to see the end result be significant just by us, rinsing, repeating, and just continuously growing, scaling, growing the account, and being able to risk more money, things of that nature. Um, so yeah, like your main focus is, should be wanting to just continuously grow your account until you're at 2 points where you can risk more money, and that's how you're gonna make like the big bank, the big bank, big bread. You're not gonna make a substantial amount of money trading with $1,000 account, $10,000 account, $5,000 account. Like, it just isn't realistic when you're doing it the right way. Okay, because you're gonna have weeks that aren't good. You're gonna have weeks that are great. You're gonna have weeks that are average. As you can see with our trades, it's been it's been a fair amount. Like I said, we won 41% of our trades. As you see, the week prior, we didn't profit anything. The week before, we won half our trades. Even this week, I mean, this week kind of, it ended up good, but it started out kind of bad. But it's like, if you don't have the type of capital to withstand all this, okay, you turning a $10,000 account to a $100,000 account in a couple of trades is just not realistic. So, you know, yeah, make sure you guys are, one first and foremost, applying everything that I'm teaching you in my calls on your actual trades, so that way you're learning and continuously growing and continuously just continuously growing your account, and make sure you're having proper risk management, scaling correctly, being disciplined with with your setups and your trades and things of that nature. But yeah, so right now, as you can see, this is our result for April so far. We got about 2 trading days left, so we can possibly end up, getting the exact same amount of profit from last month, because we profited $6,000 last month. So we could potentially do the exact same thing, maybe winning one more trade, or we can possibly win both these trades on, or even on Monday. We can win on Monday as well. So we'll wait and see. But right now, regardless, we're going to end up profitably, even if I lose these 3 trades, which is highly unlikely. We'll still be in profit. So yeah. Other than that, I will see you guys all on our next video. Make sure you guys like, subscribe, share, turn your notifications on every single time I drop, and make sure you guys are, like I said, applying the information and continuously growing and continuously learning. I will see you guys all on the next video.